Right, guys, we will get the live room on the way. I do apologize for the late start. I know we've been having a few issues with the link, but it's been sorted out now. Just to get the disclaimer out of the way, any advice or information given in this room is educational in the nature and general advice only, does not take into account your personal financial circumstances. By viewing any of the material using information presented by Bovarius Capital, you agree that this general education material and you will not hold any person liable or entity responsible for loss or damages resulting from the content or general advice provided by Bovarius Capital Management, its employees, directors, or fellow members. Spot currency trading has large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest into spot forex markets. Don't trade with money that you can't afford to lose, guys. That's crucial. Also, the website is neither a solicitation nor offer to buy or sell spot forex. Other financial products, no representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in any of these sessions. Past performance of any trading system or methodology is not only an indication of future results. This information is for purely educational purposes only. Fantastic, guys. Just to get the ball rolling, I know it's a little bit late today, but bringing up the news and just looking at a few things. What I want to be showing you guys today is just getting you across the FX calendar. I know we're running a little bit late. We had some interviews, guys. There's a few guys in the room. We're trying to switch up the times just to see where we're getting better attendance. But today is going to be a general basic session. I just want to run through a few things. I want to run through the 5 or 6 basic trading rules. Some guys are a little bit new to it. Some of you guys, it doesn't hurt just to repeat it and go back through it. Today's the 18th of April. We obviously have got that big CAD news coming out in 1 hour, which is the main thing. I know we've been pressing on it in the group. A few clients may be trading it. We've also got, with the CAD news, you've also got oil inventories, guys. Don't remember, this is a big mover. It moves the markets. Last week's figure was a bit obscured, and you got weak dollar off the back of it, and oil prices continue to surge. I'm sure you guys saw that. Just looking at it today, all you've really got is that CAD news. Apart from that, you've got unemployment from the Aussie dollar tonight. You're going to be expecting big moves from things like Aussie dollar, New Zealand dollar, and the yen pairs overnight if the Australian dollar does move or the employment rate comes out unexpected. Generally comes out quite in line, guys. Anyway, tomorrow you've got retail sales, not massive, probably not going to move the market as dramatically, and you've got quite a quiet end to the week. You've got CAD retail sales and CPI. As long as it comes out expected, I don't expect much. I think the market's going to be moving quite technical for the next few days. This is a completely different type of market condition to what we saw over the last 14 to 15 days. This is going to be a little bit more technical. I think mean reversion is going to start holding up a little bit better now. We haven't got such big news and big data. The institutions have already repositioned themselves off the back of that big news week last week, and I think generally currencies are going to start moving a little bit more technically, guys. So things like mean reversion, Bollinger Band squeeze, these type of strategies are going to hold out, and obviously specialize on entry, guys, because one thing I'm seeing a lot of lacking, especially from a lot of the P&Ls, is a lot of you guys are lacking in entry. If you can get in to a matter of fact and protect the trade, mathematically 22% of those trades will move in your favor. Yeah. Now you've got Thursday, this stuff coming out from the Fed. I don't think it's going to be that massive unless something unexpected is coming out. The data, just to give you guys a bit more understanding about economical data, the figures are coming out phenomenally well at the moment. Now, with the markets being so buoyant and the fact that they've done 25% off the back of Trump coming into power, I know you guys hear me ramble on about this. It's possibility that Trump's going to get a second term, especially by the way that he's detached himself from Russia. Who knows? No one's got a crystal ball, but if he does, you're probably going to see about another 10% uplift, and you probably won't get the crash or the recession that everyone's waiting for, the 2008 Lehman Brothers dot-com bubble, privatization, and so on and so on. Now, if you're looking at it, these are probably the major fundamental things. Brexit, the price has come back to pre-Brexit levels. The areas or the levels where sterling is at the moment, if you have a look at it on a longer time frame, is pre-Brexit, guys. Before where the market broke down. That's what you're looking at here. That's what you're looking at here. Pre-Brexit, where that was the Brexit candle, and then that was the continuation. Institutions have clearly bought up here, and they've continuously been pushing this price up technically. The reason why cable and euro have been moving a little bit out of sync was because of Brexit. These type of moves, guys, is phenomenal. The daily range in cable over the last 12 to 18 months it's a trader's heaven because there's movement on the table. Does that make sense? To go through these levels, if you ask me, to get through this big supply zone where it broke off pre-Brexit, you're going to need some good Brexit news to come out, whether it be they're pushing through a good bill, who knows, something good's going to have to come out of it. Yeah, but it's possibility for it to happen. Now, that's the only other thing. The euro is doing a similar sort of thing, but it's not as aggressively violent if you look at it on a daily and zoom out. It's always good to have an understanding of what the overall fundamentals are going to do. When the euro was down here, 2013, 2014, 2015, everyone thought it was going to pop. There was a massive thing that the euro was heavily over-leveraged about Deutsche Bank and things like that. All those type of things have been brushed under the carpet now. This is just building on fundamentals, guys. I'm making you guys masters and experts of the fundamentals so that when you're trading and you're looking at the markets consistently, you have good understanding fundamentally. It's the only way that you're going to catch short to medium term trends. It's the only way where you're going to grow accounts. That's what you guys need to focus on, as well as turning the volume and doing the day-to-day volume requirements. Is growing the account. That's the main focus over here as well, guys. Now, coming back to it, just to wrap up the news, economical data wise, that's all you can really see. Now, I know we've got US markets opening. Just going through some of the social media news, CNBC, Bloomberg, 5 things that you need to know. This is yesterday's. Let me just refresh it. It's frozen for some reason. There you go. Here's today's one. 17th. This is a must read for traders, especially when you're going into the afternoon session. If you guys are not reading this, bear with me. I'm not too sure what's going on with the internet. It's a little bit delayed. Not too sure what's going on here, guys, but 1 minute. It's going to catch itself up. Perfect. We've got CNBC up anyway. I'm sure you guys have seen Facebook in the media quite a lot recently. They're saying that they were breaking the privacy laws, and he had to go to Congress to see what was going on. I think they've been given the green light now. They're basically just covering themselves up, but there was a breach of a lot of the data. Trump's in the news again. I'm not really sure what's going on with Trump right now. I think he's just trying to hedge out a better deal for himself moving forward. Nothing about Brexit really. Share prices. It's stocks and earnings seasons coming up soon as well. Yeah, earnings are phenomenal at the moment. If you're speaking to anybody that holds stock, you guys are up 25% on your capital at the moment over the last 12 months. So things are quite good. You're going to be getting some good dividend payments out. The dividend payments are going to be quite strong. Here, something. Russia blocks Google, Amazon IP addresses in a bid to ban Telegram. This type of stuff. There's not really much else going on. Bloomberg doesn't want to seem to be working. Apart from that, let's get back to the charts. Anyway, fantastic. Bringing up the charts. Now, what I want you guys to be looking at, I just want to be going, I know there's a few newbies in the room as well. I just want to be going through the few basic rules. Yeah. Now, we're not seeing this as much in some of the P&Ls. It's a little bit missed, if that makes sense. I'm seeing some guys not trading the rules as they should be. I'm seeing a lot of there's the first rule, and this is really coming back to the basics, guys. Yeah, the first rule of trading, and this is the most important rule you ever hear: sell high, buy low. Yeah, the reason why you want to sell high and buy low is just because that's what the institutions do. What they look to do is when you buy on wholesale, if you buy big numbers of anything, you buy at discount and you sell at profit. So you never buy at the high and you never sell at the low, because you're on the you never buy for cheaper than you sell, and you never sell for cheaper than you buy. The institutions don't do it, we don't do it. It's like a self-fulfilling prophecy why the market moves into your favor. Sell high, buy low. It's because institutions look at their balance sheets, they balance it up. Banks don't sell at the high, they buy at the low and they sell at the high. That's why the market moves like that on the interim. Happens on every single asset class. It happens on where it doesn't matter what you're trading, whether you're trading wheat, gold, copper, sugar, corn futures, orange juice futures, oil, gold. All markets move like this. Markets are order driven. The market follows round looking for sell to buy orders. This is what it does. It comes in, finds buy orders, goes up, finds sell orders. Comes in to find buy orders, goes up to find sell orders. That's all the market is. It's a tug of war between buyers and sellers. Now, guess what, guys? As soon as there's a big imbalance of buyers and sellers, you see a massive difference in regards to movement. As soon as there's more buyers in the markets or more sellers in the markets, that's when you get that big move or that push up. Yeah. Now, you guys need to be understanding that the second rule is you should always be adding a stop loss. With the new guys, especially guys that come in, the biggest rule, 90% of traders lose 90% of their money in 90 days. If you don't use a stop loss, guys, you're going to blow an account. Blowing an account's like crashing a car. Eventually, you'll crash a car, you will blow an account. And to call yourself a trader, if you haven't blown an account, you're not a trader. I see a lot of guys, especially that were trading with us at the moment, they're a bit tentative. They're a bit scared of losing money. When you lose that tentative sideness, or when you lose that emotionless risk where you become unafraid, that's where you're going to make big money out of the markets. If you trade on scared money, you're never going to make any money. And also, guys, be realistic about what you put into what you get out. You're not going to put in £2,000 and turn it to 10 or 20 million. That's an horrendous road. That's going to take years of trading and years of luck. You guys need to be realistic in regards to what you put in to what you put out. And that's the one thing that I'm putting into a lot of you guys. I want you guys to breed expectation. Understand the markets is not a get rich quick scheme. If you think the markets is a way to just get rich overnight, it's not. It's a way from transferring money from the impatient to the patient. And that's one of the most crucial sayings I've heard. Now, Euro Pound, just looking at it, it's done a massive reversal back up. Now, it's clearly found good buy orders down here. Yeah, let's just go through each one individually anyway. Sell high, buy low. That's the first rule. You guys need to be seeing that. I've seen a few P&Ls where guys are buying on the high and selling on the low. That's textbook stuff. And if you guys don't understand what I mean by selling on the high and buying on the low, 15-minute, 5-day range. It gives you an interim of where the market is. This is buying on the low and selling on the high. Don't trade the levels in the middle. They get invalidated quite quickly. If you do trade those levels in the middle, the market's probably trending, or you need to be tightly, aggressively managing them. What I mean by that is you need to be in a position where your trade management is phenomenal, because emotion is crucial in trading. The market, if I'd left that trade open, the market would have run in my favor X amount of pips and I would have made X amount of capital. Those type of things are pure retail mindsets. They're pure retail ways to approach the market, guys. The reason why is the market doesn't care who you are. It doesn't care whether you went to Red Brick University, whether you went to Harvard, whether you went to, who knows, whether you don't have any education at all. The market is not subjective to that. The market will pay you if you can understand where the orders are or where the market's going. And that's what you guys need to understand. If you can understand the order flow, understand how institutions build positions, you can understand where they create liquidity pools and push the prices through. This is something that we've been drilling into you guys time and time again. It's crucial. Now, the rules 2, 3, and 4 are getting missed out the most, guys. Yeah, and I'm doing this session, I'm just going through the basics again because I think it's vital, it's pivotal for you guys to understanding how to grow the accounts. Yeah, the second rule is always place a stop loss. When you're trading London Open, you're only risking the ranges. Yeah, euro dollar 16 pips today, a little bit wide, guys. Yeah, but look at the move it's given you. When the ranges are a little bit wider, the moves are a little bit better. Yeah, that's clean, guys. That's clean. Trailing stop there, or even counter trend. Look where the market is. Near the top, I wouldn't fall in love with it, but I'll probably be 1.5 pips either side, either or. Yeah, tight trade management. There's buy orders. Can you guys see that? Markets happen. London Open, pushed down, found clear buy orders, and then reversed by 10:30, 1 o'clock. This happens time and time again. Newbie traders that trade London Open. The reason why the London Opens happened, had a sufficient push of orders down into key levels, found some buy orders and reversed and gone back up. Now, this, if you're understanding fundamentally, don't forget the dollar's weak and euro sterling have been quite strong last few weeks fundamentally. These are good things you guys want to be catching 1 lot, 5 lots, 10 lots, 100 lots on. You can make a hell of a lot of money and make your guy profitable. Yeah, it makes you guys money in the interim. Yeah, looking at dollar Swiss is working phenomenally well at the moment. Yeah, this is counter 5-day. It's at the high. Yeah, but look how strong that is. It would get you out either way, guys. You can see that. That's easy 9-pip risk, no choppiness. Let's zoom in just to get a little bit of clarity. No fill on the bottom, clean upward fill. Would have given you, if you used a 1.5 pip trailing stop, I think some clients took 15 pips on that this morning. So it's quite a good move there, guys. Yeah, having a look at it. It's 20 pips. It was quite a solid move on the way up off the open. That was quite clean. Dollar yen, coming back into it. 14 pips for dollar yen is quite wide, if you ask me. It's still tradable. Anything under 20 pips is viable. Looking at it, I'm not too sure. The template looks a little bit off there. Hold on, bear with me. I'm not too sure why. The entry should have been a little bit lower. It would have worked out. I think the template's a little bit out. Let me just readjust it. Template. Just bear with me, guys. Just let me make this a little bit cleaner. Entry factor. If any of you guys are finding that your entries are a little bit wider on the thing, you can bring it down like that. Okay, just a little bit more. They're already preset for you guys anyway. When you get the traders pack, they're already preset, but just so there's no discrepancy on it. Perfect. There's the entry. Brought down a lot better, guys. Now, that's quite clean. It is a little bit big on dollar yen, but it's still followable. Now, euro pound's the one I want to be talking about, guys, because I've spoke to you guys about euro pound last week in the live room. This thing, euro pound, does not move like this, guys. It is moving phenomenally well. Yeah? London Open, this, guys. You might have lost. Yeah? You would have got... Just let me zoom in 1 minute. Bear with me. No, it would have got you out. That's not a problem. Yeah, London Open this morning. You would have lost the range on euro pound. But you would have got a good entry straight off the supply off the buy zone. Yeah. Now, sometimes on the London Open, guys, it will happen when it's at the low and the high, and it will push into a buy zone and give you a fantastic entry. Yeah. There's clearly institutions buying here, million lots. 2 million lots. They're going to be building positions. Just be aware of this. Yeah. Euro pound didn't work as well today, but you guys know the reason why you've got to go through the process on every single one is because you don't know where the winners and losers are going to be distributed, guys. You don't know as a trader where if you don't take all 5 and 1 loses and 3 win or 4 win, you'll generally get an overage of a good growth of London Open. It's an easy way to do the volume. Yeah. Now you guys need to be following the stop losses, the trailing stops, and be precise with the intertrade management. Yeah. And also, once you put the orders in, yeah, one thing you guys need to be doing, even though you put the order in, just example sake, sell limit in the morning, yeah, the order goes in, yeah. I'm not too sure why it's just a little bit lagging. Bear with me. So just because a lot of this, I'm getting a lot of execution error in the P&Ls, guys. Yeah. So if you see, you place the order like this, like I've placed, yeah. Just delete these ones, just for example's sake, guys, yeah. Once you've put them in, you need to be right-clicking, modify order. I want stop losses and take profits in there as well, guys, as well as trailing stops. Pay close attention to detail about getting in and be precise. On a 10K account, it might not be the end of the world. When your account's over 1 million or 500,000 or 100K, it could be the difference between a 5K or 50K loss. It hurts. You need to pay close attention to detail, guys. You need to be precise. I'm seeing a lot of guys not putting stop losses, being lazy, just putting trailing stops in. Don't pick up the strategy and trade it or interpret it in the way that you want. Follow the rules exactly how we're saying, guys. On guys trading London Open, I need to see you guys doing it for 100 to 200 days consistently. This strategy works. It holds up. It's a good way. It's the most disciplined way to trade the volume. It's what all the traders in the banks do, all the private FX traders do. Anybody that's trading retail FX, any of the banks, institutions, all make money off London Opens or US Opens or Tokyo Opens. The market's as clean as it can be. You get breakouts one way or the other, guys. Yeah, it's a good way for you to protect your trade quickly and allow the market to be pushed in your favor to see whether you're right or wrong. You guys, you need to be putting stop losses and applying and modifying each one, double checking this, guys. If you guys aren't double checking and I can start to see execution errors, that's why you guys are getting wrong. Now, do you remember when we were showing you supply and demand? Can you see today, guys, we've had big moves from cable and they've pushed in and found orders. When the market's pushing down like this, what happens is it goes to find orders. I expected a pullback from these high, guys, if you guys remember correctly. The market won't just go one way coincidentally. Yeah, and you can see it's giving you opportunity. This is coming towards the low. This level down here was a fantastic buy. I'm looking for a second touch here. I'm looking for the market to come back down, collaborate orders, and continue with the fundamentals. Don't forget, what are the fundamentals? Weak dollar. We're going to see an extension of euro and cable. I'm expecting cable to head back towards 144, 145. It's not going to go through the 145 levels unless you get some good Brexit news. You could probably see it come back down to 138, 140. It's probably going to go range bound for the next few weeks, but it's going to be good technical. If it market's range bound, it's good to trade technically, guys. Now, not getting upset that I've missed the initial run-in. Generally, the market's going to come back to find bigger orders. This is looking at it fundamentally. It's giving you a better understanding. Same as euro dollars. It's similarly following it, but not as clean. This is me talking about the correlation being out. 5 years ago, euro and the pound moved 95% correlation. They moved side by side, guys. Yeah. Now, the third rule, coming back to it, and I know I'm pressing on it, and this is purely focusing on the basics, guys. Yeah. The third rule is you never hold a losing position over a trading session. A trading session can be from 6 in the morning to 2 in the afternoon. So if you're trading European session hours or 4, or from, let's just say, example sake, 12 to 8 in the evening, that's trading US markets. We generally don't trade Tokyo because we're sleeping from 10 till 6, but I know some of you guys do trade the Tokyo session. I do trade the Tokyo session when you've got news out from the CAD or the Aussie dollar like you got this good week, because if you get positions in, it's a good way to wake up in the morning and see profits on the table. Yeah. Now you only want to be seeing this market's profits from them if your stops are at break even and the market's moving in your favor. If the stop's not at break even and the market's not moving in your favor, guys, who cares? Yeah. Now this trade here has actually signaled me a very good entry. And that looks quite good for me. I'll be looking to take profit. Don't forget, I use support and resistance at roadmap. I could take the profit here. I'd even trade manage that and move that up a little bit, previous highs. I'm looking to take profits here or here. This is my target on it, really. If it comes back down, I want to be managing it aggressively. These are the type of things that you guys need to be seeing. You can see that Aussie dollar is a bit range bound on an interim. It's got big news coming out from CAD as well. It could make it a little bit more volatile. But obviously, guys, once you know how to trade one asset, you can switch it across to multiple assets. Trading one thing is like trading anything. It all works off supply and demand. If you can trade euro dollar, you can definitely trade something like euro pound. You just need to be aware of its characteristics. A little bit like how you have different types of languages. Every language has its own characteristics. Some are hard to pick up, some have big alphabets, some don't. That's what you need to make yourself masters of, how markets move. Now, to give you a little bit of a breakdown on that, euro pound is very very tight. It moves very small. Doesn't have a big daily range. The moves you're getting on euro pound at the moment are phenomenal for euro pound. Trust me. I've traded euro pounds for years. It doesn't move like this. The way it's moving right now is great for a trader. Now, here's a prime example, guys. Yeah, can you see my 5-day range is getting broken and the price is moving out? This is giving me a good idea that the market's moving fundamentally. What that tells you is you want to be going with the trend. Don't try and catch a falling knife. You'll just get cuts on your hands. And that's from somebody that's been trading the markets. Picking tops and picking bottoms, because that's a big retail mistake. It's just a way to blow an account. It's a way to give money to the market. It's retail liquidity. It's either going to give you a full sense of security or give you a situation where you lose money and you just can't work the markets out. To get rid of falling knives, picking tops and buying bottom, falling knives, picking bottoms and catching the tops, if you sell at the high and buy at the low, remember the first rule. Yeah, these rules I'm giving you here are adaptable to all trading conditions. You need to use them in regards to trade management. If you want this type of disciplined P&L that I'm showing you guys, if you're not disciplined or you're not using the trade management effectively, you're never going to get there. Now, coming back to that, because some of you guys are always asking me, no, how do you catch the big trade? How are you always in the big move? How do you know where the market's going? Listen, I don't have a crystal ball. I don't bring my ego to the table. I allow the market to tell me which way it's going to go. I select my entries, making sure that I sell at the high and I buy at the low, and I allow the market to tell me which way it's going to go. I never hold a losing trade over a trading session. Just cut it. When you put your stop loss in, which is the second rule, if the market hasn't moved in your favor sufficiently by then, guys, just cut the trade. Forget about it. Keep it moving, if that makes sense. Otherwise, there's no point of doing it, because you're breeding yourself bad habits. The reason why you never hold a losing trade overnight is because when you log into your account and you're managing losing positions, it's stressful. If you can't find out when you've placed your order for 10 or 20 pips that you're incorrect, it's too much risk as a day trader. If you're day trading, one of the major advantages of it, guys, is the fact that you can be nimble. You can pick and choose your spots. You can get in and out as comfortably as you like. Yeah. Now, this is the crucial things that you guys need to be making yourself more familiar with. And realistically, guys, if you're not following the rules and building the rules on top of rules, you're going to end up in a mess eventually. Yeah. Now, that third rule of not holding a losing position overnight is crucial. If you want to trade funds, if you traded for any prop house, any bank or anything like that, they're very risk averse. Prop houses generally don't let you hold positions overnight because of the leverage exposure when the market opens up. The uncertainty where the market can push gap one way or another. Prime examples, Swiss National Bank, they undercapped the peg. A couple of brokers, Alpari and stuff like that, got caught margin called. That's market making, guys. Yeah, just to give you a little bit of a rundown on that as well. We don't stipulate like that. We don't lose when you guys. We don't profit when you guys lose. So for that instance, there's nothing like that where the brokers can be underpinned. Also, we've got negative balance protection. You can't lose any more than the account that you see. So these are type of things that show you that we're playing with the real market. There's a true cost of trade. For example, there's a true cost of trade getting in and out. Spread betting brokers give you a cheaper spread to get you in. It's like taking candy from a baby, but they don't give you the real execution. When you profit, somebody else doesn't lose. When you profit, the company loses. That's why it's different. That's why it's tax-free. You're betting on the price of the of where the price is going, guys. We trade direct market. We trade STP or ECN execution for that reason. Yes, it's taxable, guys. If you guys are making money out of anything and you don't want to pay tax, forget about it. Go and stick on your spread betting accounts. I'm looking to trade big funds for investors, for whoever it is, and I want to know when I trade, there's no stipulation. No one's hunting my stop. No one's dealing against me. No one's profiting. When I profit, I want to know that I hit the banks. I hit retailers that had their positions in the wrong place. The market's zero sum. It's like poker. When you make the wrong decision, someone else profits. That's why a lot of guys who study mathematics and look at trading, look at mathematics and look at poker, because it's zero sum. Somebody else makes the mistake. You're not playing the house, if that makes sense. And that's the same thing the same way I look at trading. I look at mathematics. I'm a mathematician. If the mathematics doesn't make sense, how is it going to show up in your P&L? It's never going to be there, guys. You guys with me? Yeah, great. Now looking at it, the fourth and fifth rules, yeah, is you want to be building up positions in your thing where your stop losses are at break even. Now to give you lots of mathematics, out of 100 trades, mathematically 22% of them will run in your favor. So if you open 100 trades, 22 of them would have run in your favor mathematically, guys. Now, if you open 1,000 trades, mathematically 220 of them will run in your favor. Now, this is what you need to, guys, need to get into the habit of doing. Getting in the position, stop to break even. As soon as you put, the reason why I use a trailing stop is because it removes all emotion, guys. It removes the fact that you have to protect your trade. So what if you get taken out? It's just an added benefit that you make the rebate here. But if you get taken out, what that tells you is that your price was in the wrong place. Trading's all about entry. You need to sell high, buy low, protect the position, and then allow the market to tell you if you're right or wrong. If you don't have that approach to it and you go to the market with the fact that you've got an ego or the fact that you want to call the market or you want the market to move in your favor, the market's going to teach you a nasty way. I've lost a hell of a lot of money bringing my ego to the table or thinking the market's going to go long or thinking the market's going to go short. The market doesn't care who you are, where you came from. The orders will tell you where it's going. And this is what you guys need to start to understand. If you can understand the order flow and where the institutions are pushing the price through and building up positions, the quicker you guys are going to turn this from a burden into a cash cow generator. Turning for volume, guys, just so you guys are clear, is probably one of the most safest ways to trade and get income. If you're trading for just profits from your account without the rebate, it defeats the object. When I used to trade in the prop houses, we were giving $1 a lot and doing up to 400 to 500 contracts a day. So we're making $500 on these small accounts. When you scale it up to £1 million or £2 million, it's phenomenal, guys. The money's life-changing. And that's where we want to be getting you guys towards. But we want to get you guys fighting emotion, getting to good understanding, getting to good levels, and really getting you guys confident. Yeah. Now, just looking at a few things just before we're wrapping up. That fourth bit of building the positions, so suddenly you have multiple positions across multiple asset classes where your stops up at break and you allow the market to grow in your favor. If you practice this type of things and you don't see it in your P&L, give me a call. We'll do a one-to-one coaching session just to get you up. It could be fundamentals, it could be technicals, it could be something that you're missing that's so basic. But what we're playing on here is fundamentals heavily because it gives you a free insight into the market. It allows you to know where the market's moving. Now, looking at it, just to give you guys a little bit of a thing, it's going to need some big news to break these highs, I think, personally. Yeah, if you're looking at it, it's going to need some big news to get back up. It's probably going to come back into these orders to find orders. If it goes up a bit faster, it will tell me that institutional order flow is strong, guys. There's institutional purchasing power behind the move. We can see that on the screen, if that makes sense. But we're waiting to see anyway. Now, looking at it, guys, I want to add the last couple of rules because it's crucial. This is going to get posted on YouTube, so you guys can have a look at it. The last couple of rules I want to bread and really start to embed into you guys is if you have 3 losing trades in a row, yeah, I don't want to see you guys trading. If I see 3 losing positions in any one day, stop trading for the rest of the day. Go do something else. Don't have a disaster just because you had a little bump on the car and then go and write the car off, if that makes sense. Keep your head in the game. It's about keeping your head in the game as well, guys. Sometimes in trading, you got to know when to take a break rather than just stop. Don't stop when you go broke, guys. The guys that stop when they go broke, that's a professional mindset. You've got to fall in love with the process, not the results. And that's something I'm playing on you guys massively about. Yeah, fall in love with the process, fall in love with placing the orders. What we're showing you guys is very simplistic. It's about controlling the emotion, following the process, and managing the orders. Yeah. Okay, what I'm going to do, okay, now just to finish the last 2 things off, I do apologize, we're running interviews at the moment, we've got some few guys coming in, that's why it's a little bit delayed, a bit choppy, but just to finish on this, yeah, 3 losing trades, no trade for the rest of the day, guys. If I start seeing that, if you guys lose 1 or 2 or 3% of your account on a large account, you need to stop, you need to reevaluate, you need to go away from the screen, to look at the fundamentals. Sometimes it's about studying and learning and working on that, working on the emotional side of it, rather than just trying to go in all gun-ho, guns blazing and start gambling. Yeah? Now, that's crucial. If you're not having 3 losing trades and forgetting about it, that's one of the biggest thing a lot of amateur traders do. They just continue on trading till they blow their account and they can't trade anymore. If you have 3 losing trades in a row, these are the type of things that are going to make you guys disciplined. If you can't embed these disciplines, forget about trading large accounts because you're just going to lose money and then you're just going to be upset and going to be emotional about it and be like, I want to make money. The market moved in my favor 5 days later. Why didn't I hold on to the trade? All those type of things. pure retail. I'm a trader. I've traded the financial markets for over 9 years, and I like the buzz of getting in and out. I like the fact about calling the market. If you bring your ego to the market time and time again, the problem is you're going to run into a string of days where you lose. Now, if you continuously keep risking all your capital all the time, you'll run into a disastrous day where you lose 30% or 40% of your account. Trust me, I've been there. I've done it myself. That's the type of things you need to keep yourself out of. If you're trading investor funds, you can't have a 30% drawdown. Your account will get pulled after 10%. In industry, if you're trading anything over £1 million and you lose 100k, you instantly lose your job. If you lose the account twice, 2 months back to back, it's termination of your contract. It's like being a footballer and breaking your leg. You're never going to kick a ball again, if that makes sense. So that's what you guys need to be starting to breed into yourself. So 3 losing trades, no trades for the rest of the day. Yeah. Now also, when you start to repeat the process, if you trade supply and demand, London Open, consistently for 100 to 200 days and you don't see the results, you're missing something. These strategies work, they hold up, they make guys money, and this is what I need you guys to start to do. I need you guys to start understanding. I do apologize if it's a little bit repetitive or a little bit new to some of the newer guys, but we're just going through the basics. I know these videos are going to be up there so I can repoint new clients towards it, but I'm just drilling down on some of the things because some of you guys want to be pro traders. You want to trade your own money, you might want to trade from your home, who knows, but you need to be running through these rules. So those 5, 6, 7 rules that I've given to you guys are must. Sell high, buy low. Always use a stop loss, guys. Always put a risk of 0.5% to 1% of the account. On 6 figures or plus, £1 million, you should only be risking 1%. So 1 to 2% consistently, guys. You should be looking to, on a 100k account, if you're looking to make £1,000 or lose £1,000 a day, that's a good risk reward. If you do consistently and your strategies are quite good, you'll see quite good growth in them over a 6-month period. Yeah. So 3 losing trades, no trades for the rest of the day. Yeah, that's crucial. And also, guys, you guys have got to cash in on your profits. One of the major things I see from a lot of newbie traders is the fact that they build up these accounts and then they blow them and they never cashed in on their winnings. Yeah, when you're winning, you want to be taking money out of your trading account. You want to see your trading account as a vehicle to get you from A to B, get you from destination A to B. Taking withdrawals out of it, spending some of the money in the account makes it all the worthwhile. At the end of the day, guys, that's why we're doing it. We're doing it there to make money, spend the money, and make more money. That's what it is. It confides and redevelops the fact that it allows you to cash in on your winnings. I'm sure you've heard of a thing. When you're winning or when you're up, you've got to cash in as well, guys, because you need to be, you don't know where your winners and losses are going to come. They're going to be unevenly distributed. It's about going through the run and staying in motion, you think. These strategies in these market conditions are fantastic. Now that markets have gone more robotic in the sense where it's all algorithms pushing it around, you can see it in the markets. You can see the manipulation. If you've traded the markets for over 10 years and you day watch the screen time, as much screen time as I have, you become quite adept into how the market moves. It's only got about 8 or 12 different types of patterns that it moves. Either does a false breakout or follows through. And that can go either or, sell high or buy low. And that's what you guys need to be looking at. Yeah. Now, I do apologize, guys. I'm just going to wrap it up because we've got some interviews. But I hope that's gone through the 6 or 7 most basic rules. I want to start to see you guys doing that. Don't hold any positions overnight that aren't, your stop losses aren't at break even, because that's crucial. This is really what it's doing, guys. It's just playing on entry. It's allowing you to get in and protect the position and allow the market to move in your favor. It's the fastest and most effective way to grow an account. Anything you've heard online, anything else, is full of nonsense, guys. This is the only way to do it. No one's got a crystal ball. You can't guarantee me where the market's going. All you can do is put the order in and see if your order or your price is good enough to be held over a longer period of time. All right. There's no questions. I know there's not been a lot of interaction in the room. I haven't had any direct questions. I think it's a very elementary session. There's a few new guys in here. We will be switching the times of the live rooms up just to get a little bit more time and get more guys in and out of the room. We've got some big things going over here at the moment as well. So happy trading, guys. Any questions, any queries, give us a call. Any guys that need any coaching or need any P&Ls audited, do give me a call. I will go through it. And we'll give you some maybe how to eliminate the losing trades, how to stay consistent. Guys, start adding that last rule. Don't have more than 3 losing trades in a session. If you're losing more than 3 trades in a session and continuing, you're going to be emotional. You're going to start gambling. You're going to start chasing losses. I've done it. I've seen juniors do it. I've seen guys that trade a hell of a lot of money do it. Don't do it. Don't chase losses, because you'll just end up with a nightmare story where you lost X amount in the market and spent 10 years chasing it back. Let's think like professionals. Let's put ourselves on a level playing field. Let's give ourselves the opportunity to win. This is is 60% mindset, guys. Winners win and losers lose. So I'll wrap it up for today. We'll be putting the live room on YouTube anyway, for those guys that missed out. Happy trading. Anyone's got any questions, get in touch. And we'll be hearing from you soon. Thanks, guys. Bye.